In the metals quadrant, taking a look at the April gold futures contract, which just missed a new all-time high, but it did complete its fourth straight session higher. And that's not all that's positive for the gold bulls. Gold broke out above the upper end of the horizontal channel that it's been in since the beginning of December of last year, closing above it on March 1st, extending that by 1.4% yesterday, and then extending it again today by so far close to 0.6%. The high 21.50 and 50 cents, up 1.14%. The low 21.1850, that was down a little bit more than a third of 1%. Now, since the last time gold went down to the bottom of that same horizontal channel on February 14th, the rally has run a total of 6.8%. We got China's growth pledge today, and that 5% growth plan underwhelmed the market. And that's part of the reason that we get a rally in gold, and I'll explain that in a minute. Some analysts call the growth target a target without a plan. China's premier Li Qiang referenced it as a bullish target, but without any details. The market did not seem to agree, and that's part of the rally in gold today, because if China doesn't start to recover in a big way, we're unlikely to have higher rates in the long run, and lower rates would push gold a little bit higher because it would weaken the dollar. And we did get that today with the yield side of things falling again and the dollar falling for a third consecutive session. Now, we do have central bank meetings this week. We have two of them, the Bank of Canada tomorrow and the ECB on Thursday, both making rate decisions that could affect the trajectory of gold if they were to be a little bit more hawkish than the markets expect them to be. Again, that's not what the market is expecting, but that could be a source of a strong pullback in gold if it were to come about.